In today's video, I'm going to teach you how to do options on Thinkorswim. We'll walk through finding an option, building an order, and practicing the send, all from the Trade tab. Start on the Trade tab and open the All Products sub-tab. In the symbol box at the top left, type the stock or ETF you want to trade, for example, MSFT, and press Enter. The option chain loads beneath the quote. It's organized by expiration dates, each expanding to show strikes. Calls are on one side, puts on the other, with bid and ask prices for each contract. You'll also see days to expiration, which helps you gauge how much time value you're buying or selling. Choose an expiration that matches your plan. Shorter expirations decay faster and react more to near-term moves. Longer ones give you more time, but usually cost more. Next, pick a strike price. The strike defines the price level of the option, and in-the-money and out-of-the-money strikes are visually differentiated to help you navigate quickly. To build a single-leg order, click directly on the price. Clicking the ask creates a buy order. Clicking the bid creates a sell order. Select the call or put row that fits what you're trying to do, and an order ticket appears below. If you prefer multi-leg strategies, right-click on the option line to open menus for common spreads and other strategies. The platform will auto-populate the legs and default pricing, saving you the effort of pairing strikes manually. Once the order appears, adjust the quantity and price. Quantity is the number of contracts, and each standard contract typically represents 100 shares, so small changes can meaningfully affect buying power and risk. Price is quoted per share, so a limit of 1.25 means $125 per contract before fees. Use the price controls to nudge toward the mid-price if you want a more balanced fill attempt, and watch the estimated cost update as you fine-tune. When everything looks right, review the details in the order section and send the simulated order. This lets you practice the workflow and see how the position would appear without committing real capital. After it's sent, you can track it in order status and analyze how different expirations and strikes would change the risk profile. That's all you need to get started. Load a symbol in all products, select an expiration, and strike from the option chain, click the bid, or ask to build the order, or right-click for spreads, then adjust quantity and price and send the simulated order.